Have you ever wondered how the richest families in the world invest their money? No, I'm not talking about millionaires. I'm talking about billionaires. Hey everyone, I'm Jacob Turner, former Major League Baseball player and current co-founder of Moment Private Wealth. In today's video, I'm going to talk to you about just that. And it's not going to be my opinion. We're actually going to dive into one of the biggest studies on billionaires and family offices. We're going to be talking about families that on average net worth is north of $2.5 billion. We're going to talk about how they invest, how they think about risk, what types of investments they own. And make sure you stay till the end because we're going to tie in all those different aspects of what they do to the lessons that people like me and you should learn about. Before we dive into some of the numbers, let me preface exactly what we're going to be talking about so we're all on the same page. When I say family offices, that means that's one family that went out and hired a team of experts to help them. That's not multiple families working with one team of experts. It's one family working with one team of experts. So essentially, to be at the family office level, you're talking an excess net worth of north of $500 million. Now, in this study, we're going to ramp it up even more. The study we're going to look at, the average family's net worth is north of $2.5 billion. And if you're anything like me, I grew up always wondering, I wonder what those people do with their money. Now, for me, I was thinking about millionaires, not even billionaires. But I think it's going to be really fascinating to walk through this with you and dive in. And again, at the end, we're going to talk about those lessons. Like, what can we actually take away, even if we're not billionaires, from this study? The first part of this I want to talk about is how do they actually invest their money? So what I'm about to show you is what's called an asset allocation. Now, an asset allocation in really simple terms just means what are the different asset classes we own? Or even in simpler terms, when I say asset class, all I mean is what are the different types of investments we own? So these could be things like our personal house. These could be things like stocks. These could be things like bonds. These could be things like privately held companies or anything across the board. It could be watches, jewelry, cars, etc. Any investment we have. So what I'm going to show you is how do the highest net worth families actually allocate their money today. So what you're looking at here is the asset allocation of those families. And I want to start with the main core components here. There's a lot of different numbers on this page, but let's look at the main core components. The first thing that I want us to look at is just the difference between traditional asset classes and alternative asset classes. Now, most people think that whenever they get really, really wealthy, whether that's to a millionaire status or a billionaire status, you do something different. And what I see right here at the core competency of this is a lot of the billionaire families that we're looking at here invest similar to how you might invest if you had $100,000. And what I mean by that is this. If you look at traditional, they have about 58% of their assets in traditional investments, and they have about 42% of their assets in alternative investments. Now, if you're just starting out your wealth building journey, those numbers might be different. You might have more towards the traditional side and less towards the alternative side. But the fact remains, they have more money towards the traditional side, which in all honesty is more the boring side than they do towards the alternative side, which is often the exciting side. So that's the first thing I want you to look at. The second thing I want you to look at is if we break down how the traditional assets are allocated, you can see that they have 28% in equities, they have 24% in developed markets, they have 4% in emerging markets, 19% in fixed income, 16% in developed markets. And the reason why I point out those numbers is simply this. They have diversification. This is one of the first lessons that I want us to learn in looking at this. Getting wealthy is one thing. Staying wealthy is a completely different thing. And what you're looking at here is all these different numbers. These are all different investments that they're making. The lesson that we can learn from this is that even the richest families in the world heed the advice that diversification is their friend. By diversifying their assets, they're saying, I've already won the game. I want to make sure that I can stay in the game and continue playing it. So now let's talk about some of the cool stuff that they do. This is really on the left-hand side of the screen. We're looking at the alternative assets that they own. So in this scenario, they own about 42% of the total portfolios are in alternative assets. These are things like direct investments. So think investments into privately held companies. This is things like traditional private equity where they're investing maybe in a group of private companies together. Things like real estate. Now, when I say real estate, this could be things like their primary residence, like that's an investment. It also is things like hedge funds and gold and things like that. But the lesson I want you to learn on this side is this. There's all these different categories. And oftentimes we see all these different categories online. You see the shiny object story of somebody investing in one of these and saying like, this is the next thing you want to do. You want to invest in gold because it's a hedge against inflation, whatever the news article says. The lesson we can learn from this is while they have some money positioned towards alternative assets, each one of these asset classes or each one of these investments, said another way, is really a small percentage of their total net worth. So the next time that you see an article that's telling you should go all in on private equity, or you should go all in on real estate, or you should go all in on direct investments or gold or whatever it may be, just remember that the richest families in the world aren't doing that. And the first lesson that we have here, guys, is that diversification is our friend. Getting wealthy and staying wealthy are two different things. Now let's talk about how they actually think about risk. Before we talk about what the study shows about risk, I want to outline, when I say risk, what do I mean? And there's this great line about risk, and it says, risk is what is left after we've accounted for everything. Now, what does that actually really mean? Well, let's think about the biggest times that there's been downturns in the economy or the market, or when you're making an investment and maybe lost money. In the past several decades, the ones that come to mind for me is in 2000, we had the tech bubble. No one saw it coming. In 2009, we had the mortgage crisis. No one saw it coming. In 2020, we had COVID. No one saw it coming. You see the theme there? No one saw it coming. So everything that we had accounted for was in place. And then that little bit that was left over that we couldn't account for, that was risk. So the way that I want us to think about risk is this. There is a direct correlation typically between the amount of risk we're willing to take and the potential for return. Doesn't mean we're going to get that return, but typically the more risk we take, we should be compensated with a higher rate of return in the future. But just remember, risk is what is left after we've accounted for everything. So let's take a look at how billionaire families are thinking about risk in today's economy. All right, so remember how I said that risk is what is left over after we've accounted for everything. And the reason why I said that's pretty simple. I want us to think about risk not in terms of just what we start with in terms of risk, but also what we might change to in the future. Now, in 2024, we have an election coming up. And oftentimes when an election comes up, people are really nervous and they want to know, because this event is coming up that could affect the economy, should it change how my risk profile or what my investments look like? And what you're looking at here is the wealthiest families in the world, billionaire families, more often than not are saying, no, we're not planning on changing our risk profile. You can see right here, about 61% of those families are taking on the same level of risk. About 21% are saying they'll take on a little bit less risk, and about 18 are saying they're going to take on a little bit more risk. So we've talked about the bigger picture of what a family's asset allocation looks like at this level. We talked about risk and what that looks like and the lessons that we can learn from each. The last thing that I want to touch on is how do they actually investing in these different asset classes? Because and the reason why I think this is so important is, listen to this. Most people think there's like some secret sauce. They're getting access and they're doing things that you can't do. And when I look at this, oftentimes this looks really similar to clients that we help who are, yes, they're millionaires, but they're not billionaire clients that you're seeing on the Forbes 1000 list. So if we take a look at this, a couple things I want to point out. If you look at the private equity investments, so this is private investments that they're making, the large majority of those private investments are still in funds, which means that somebody else is managing those investments for them and they're investing into different funds. Now, look, they might have access to funds that you don't have access to because they have more ability to write a bigger check to those funds. But the fact remains, a lot of the same investments are available to most investors that they're available to billionaire families. And the second thing I want to look at is on the bottom half of this is talking about real estate. Now, you'll probably see somewhere out there that X percentage of millionaires or billionaires own real estate. And it's true. Almost everybody owns real estate in some form or fashion. Let's not forget that your primary residence, the home that you own, that you live in, is real estate. That's part of your investment portfolio. Now, look, is it really an investment or not? That's a discussion for another day. But the large majority of people own some form of real estate, and billionaires are no different. About 52% of their real estate is held and owned directly. Now, a lot of times that's because they have primary residence and maybe they have a business and their business maybe owns the real estate that they own. But to me, the biggest takeaway here is this. These investments that you're looking at are what's classified as alternative investments, or these are like the cool investments, private equity, real estate. These are outside of somebody's core portfolio. Yet billionaire families own very similar selections in these asset classes than most millionaires own. And the takeaway there for me is this, guys. There is no secret sauce out there. It goes back to like, how do we actually build wealth? We build wealth by doing the same thing consistently over a long period of time. The takeaway I want you to have when you look at that is, remember, they're not generally taking on more or less risk. So what lesson can we learn from that? And I think the lesson's pretty simple. Remember, risk is everything that we've accounted for. It's what's left over. So we've already accounted for everything that we think is going to happen, right? Like there's studies that predicting what they think is going to happen in the future. And the reason why I think that's really important to think about for us is oftentimes that means we shouldn't change what our risk profile looks like. If we were comfortable taking on a level of risk to reach our goals 6 months or a year ago, unless something has changed in your own life, not externally in the economy, oftentimes changing your risk often hinders you more than it might help you. So the next thing that I want to talk about is I want to dive a little bit deeper into how they're actually investing. So remember, we just looked at data that was talking about families that are worth north of $2.5 billion on average, $600 billion of total wealth. And what are the 4 lessons that I feel like all of us can take away from this? Lesson number 1 for me is pretty easy. It's diversification. The fact that the richest families in the world subscribe to the notion that getting wealthy and staying wealthy are 2 different games, and the best way to stay wealthy is to diversify your assets, just like they're doing. The second thing that comes to mind for me is there's no secret sauce to this. And I think the lesson that we can learn is most of the assets that billionaire families have is still positioned towards what I would describe as more of their boring bucket. It's their public market core portfolio. Nearly 60% of their assets are positioned towards this bucket. The third lesson that I think we can learn is that risk shouldn't change just because the economy is going through a time of uncertainty. The time when risk should be readjusted or reconsidered is when our goals have changed, our personal life situation has changed, but not when external things have changed. Nearly 60% of families in this study said they weren't going to change anything. And out of the other 40%, 20% were actually raising the risk profile in a year that we're going to have an election, and there's a lot of uncertainty around it. And the fourth lesson that I want us to take away from this is, even when we look at the cool investments that these billionaire families are doing, private equity, real estate, how are they actually investing in those asset classes is often similar to what we see with just millionaire families. They're investing in funds and they're investing directly in real estate, just like most Americans out there. And I think this is a big takeaway for me. When I was growing up, I used to always think like, what is the secret sauce? Like when people get to a certain level of net worth, they must be doing something differently. And now look, I think there's a lot of nuance to how they've built their wealth, but in terms of how they're preserving it, a lot of the core fundamentals the same. So use those 4 lessons, whether you are just starting out your wealth building journey or you're somewhere along the path to becoming a billionaire. I think those 4 lessons can help you. If you like this video, make sure you check out this other video. I think it would be helpful for you as well. And I'm always putting out weekly content. If you have ideas, you have questions about personal finance topics, sports and business topics, money topics in general that you think would be helpful for me to cover, make sure you leave them in the comments section below. And I look forward to seeing you on future videos. Let's get smarter with our money together.